the focus on gold, shall we? We just talked about France. So, are political uncertainties and early elections in Europe likely to impact the gold market? To unpack the latest trends, Bas Kooijman, DHF Capital CEO, joins me now. Bas, welcome. Thank you so much. The world is feels very uncertain. Feels more uncertain than it has in a very long time, even if you listen to the head of the Future Fund here in Australia. So in this environment, we know the Future Fund has said it's going to be investing in gold. Is that wise for the average investor?
Yeah, thank you so much for having me. We are indeed seeing very volatile markets this whole year, actually, already with gold. Gold being up about 12% already, sawing a really nice hike again on Friday, and it's all very news related. So it can be the European elections, it can be the question if there will or not will be any interest hikes. It started the year with the quest to go up, and it definitely did that. This moment we really see a bit of a slowdown, and every time there is some news, you basically see the gold price moving. And it's very interesting to see how many times the gold market can actually move when news is first already expected to come out, then actually comes out, and then maybe it's better or worse than a consensus of the expectance of how the market would react. So we really see that when the gold price moves, for example, based on the rate cut or rate hikes, you basically see the market every time responding again, even though the price should already be calculated in. So very, very volatile markets in gold this year.
Okay, and how do you think, what's the weighting, I suppose, of the impact of monetary policy expectations on the price of gold? Because we've been through this cycle of expecting, a handful more of interest rate cuts in the US to start the year, and that's slowly been getting whittled down. But gold does move, with every sort of change in sentiment toward cuts in the US.
Yeah, absolutely. So basically, we started the year, I think, with 5 expected cuts. I think we are down to maybe 1 or 2. With a 70% consensus chance that there will be one in September. And as I mentioned, every time that there is news around this, will there be or will there not be a cut, the market actually moves with those speeches of the Fed. And we see gold move very volatile lately in this market with full of news.
All right. And so will central bank buying still be impactful as well?
Yeah, it is. We actually, from France, we said that they will take a little break on that. But in general, we see that gold always been a very stable asset for central banks, for investors, for larger hedge funds. The biggest rise on gold we saw around February, March, actually together with a very, very large hype in the Bitcoin market with the Bitcoin and crypto ETFs. And at the same time that those markets went up, people were also buying gold. And the biggest price range hike was actually based on retail investors or larger individual investors all together buying both the more risky crypto asset as they are also buying a more safe asset, gold, as a hedge. So we see that the markets just really actively move also on this kind of occasions.
Okay, and so where do you anticipate that the largest buying of gold will still come from? China, Poland, I know was buying a lot of gold, like Russia. What's happening in terms of where the demand really is?
I think the demand is worldwide, but everybody at their own time with their own balance sheets choosing to ramp up their reserves. There might be a bit of a summer stop, as we see every summer. It's getting a bit more peaceful and a bit less volatile in the market. Yet when there's lower volume, the moment that a larger buyer, a central bank, or take a very large stake into the gold market, you do see that the volatility goes up very quickly. So in generally, it's going to be a peaceful summer. On the other side, if something happens like a geopolitical tension, the market can move very aggressively because there's not much volume to hold it at a stable price.